And hello and welcome to another episode of Startup Caps with myself, Tanya Habimana. And this week, we're talking about the African consumer market, one of the most dynamic and rapidly evolving markets in the world. Today, we explore the burgeoning opportunities and key insight that highlights Africa's immense potential as a consumer powerhouse. Indeed, Africa is on track to become one of the fastest growing consumer markets globally, with projections indicating a staggering 1.7 billion consumers by the end of this decade. This growth is driven by a rising middle class, urbanization, and increased internet access, setting the stage for a substantial increase in consumer spending across the continent. African consumer expenditure has grown at an annual rate of 3.9% over the last decade. However, entering the African market comes with unique challenges, from currency instability, lack of infrastructure and distribution networks, competition from established multinationals, all the way through to the predominance of informal markets. In this episode, we look into how new ventures are using technology to overcome this and tap into this ripe 1.7 billion people market. Our first conversation is with two investors actively investing in the sector. I spoke to Andriata Muforo, partner at TLCom Capital, and Alvaro Perez-Cano, partner at Speed Invest. Let's listen in. Andriata, I want to start with you. When we're talking e-commerce, consumer markets, there's been a lot of buzz. I think it's the second big buzz word after fintech when it comes to VC and the startup space in Africa. My question is there still room for new entrants, particularly when we're looking at e-commerce?
Certainly. So when you think about e-commerce on the African continent, I think also it's important to divide between the fact that there are different markets, and the saturation in the different markets it differs. So if you think about South Africa, for example, there's probably more depth in e-commerce when you compare it to other markets where the online is much more. So when I think across the continent, there are a few markets where we've gone deep, but we can go deeper. And then there's some where there's a lot of work to do. So if you think about, say, Kenya or Nigeria, for example, in the online space, it's still less than 10%. If you think about online modern market, it's still less than 10%. So there's still a lot one can do around e-commerce. Even in markets like South Africa, where it's more developed, I think there's a lot that you can still do here as well. And it's really about also the niches and finding spaces that are probably not as digitized to start to digitize those spaces. So yes, I think there continues to be a lot that one can do to bring more commerce onto the net.
But that's an important one, spaces that are not yet digitized, because sort of the criticism when it comes to e-commerce and let's say consumer markets in particular is the fact that we still have a very nascent consumer market in many African nations, where smartphone penetration, internet penetration is marginal. So does this make sense for all markets? Is there still room for growth, and how should this be approached?
Yeah. Look, the way that we kind of look at it on the whole is there does need to be a certain level of infrastructure in place to be able to successfully scale a tech-enabled or a tech-based business model, right? So the way that we look at it usually is you have, a certain degree of telco infrastructure that's come into play that allows for data costs to come down. Once data costs come down, people start to acquire smartphones. Once smartphones are, prevalent in the country, you can start to shop online. So if that base level of infrastructure is not there, it's going to be very hard for digital commerce to actually happen, right? But once that is in place, the opportunity is massive, right? People want to transact online. Once the telco infrastructure is there, fintech starts to come into play to enable some of those payments, to enable some of those transactions. But yeah, to answer your question, I think there does need to be a base level of infrastructure to be set.
Is the infrastructure that we have sufficient? How far are we in the infrastructure development game?
So in terms of infrastructure development, again, I go back to the point of the differentiation across different markets. Because there's some markets, again, like South Africa, for example, where the level of infrastructure, if you're thinking about distribution, if you're thinking about payments infrastructure, is more advanced. And then in other markets, there's still some work to do. So if you think about Kenya, where mobile money is ubiquitous, many people are using it. So the payments, you could say that to an extent, the payments is sorted in that, but not that necessarily the distribution, because you find that there's quite a bit of fragmentation that's happening there. I think the other piece of it is understanding also kind of the SMEs and the people that are that are selling online, because that's also fairly fragmented when you compare it to other markets. But I think, yeah, the infrastructure is still lacking, and I think that's one of the biggest challenges. So even if you look across the companies that have been bigger or been playing in e-commerce for longer, like for example Jumia, you find that they had to build the infrastructure from the beginning. And part of infrastructure is even like, how do you sensitize people to begin to trust that they can transact online, and how do you get them online? And then you think about the distribution, the payment. So yeah, it's quite extensive in terms of what you need to build to get it to a place where you can get more people using e-commerce.
And that's an interesting point, because even when we look into the South African market and you have e-commerce players such as Takealot, they have had to develop their own delivery, fulfillment and logistical infrastructure. So then from an investor perspective, do you look at that? Do you look at how much of the infrastructure is already developed to support the venture that you would potentially be investing in?
Absolutely, right? And it doesn't have to be limited to e-commerce infrastructure by itself, right? There's a lot of innovative business models nowadays that take advantage of infrastructure that already has been built. So think mobile money agent networks, right, that have already been built in markets like Kenya. Taking advantage of some of those networks that have already been built by previous companies in the past is what the new e-commerce players are doing, to not have to start from scratch and be able to run more profitable business models, right?
What about profit margins versus market access? And I'm thinking, again, I mean, Takealot is part of the Naspers group, so it's a listed company, so we get to see the ins and outs of how profitable they actually are. And what we see is that there's a play, and I think we see this globally as well, actually. There's a play in terms of gaining your critical mass, your market access, market penetration, versus actually being profitable when you're looking on a unit cost perspective. How do you view this from, I guess, the investment landscape and the investment thesis?
It's a very good question. And I think the fundamental thing for us is the unit economics needs to make sense. Like, as day one, like that's the first thing that needs to make sense. So when you're selling each product on a gross margin basis, on a contribution margin basis, is that positive? And then if it's positive, then you can now think about, okay, now how do I grow this and how do I scale this? Because if you're scaling something that's on a unit economic basis is negative, it's an uphill battle, right? In order to even get it to be sustainable as a business. I think that's one point. And then there's a piece around market access, which is, there is an advantage in terms of moving quickly, taking over the market, building a brand. E-commerce is a space where you need to do quite an extensive amount of marketing and be able to build a brand. However, there's a trade-off between the two, and then there is capital that's required to do the two, right? And right now we're in a very tight capital market. So also the decision is made when you think about kind of what's happening in the capital markets, that also is factored in. So there's value in going deep in your market, expanding your market, being in more than one market. There's value there as well. If you think of also when you think about economies of scale, right? Because with e-commerce there is some economies of scales you can leverage because there's like fixed assets and fixed costs that you have. But you also need to think about the capital that's required to do that. And right now it's a tough environment, so you also need to adjust.
And whether the capital is here or elsewhere, as we've seen it was the case with Jumia listing in New York, is there the capital locally to allow those e-commerce startups to be able to have the growth and expansion capital that they require, because even globally we see it with e-commerce platforms that are born in the West, that have access to huge consumer markets, and yet 5-10 years down the line are still not profitable. Is the capital that we have here enough?
Yeah, look, I think that's a great question, and it's obviously what Andreata and I are trying to solve here on the continent. I do think that after a certain scale, you do need to go look at outside still in Africa. You do need to look into the international capital markets. Middle East is proving as a very successful fundraising strategy for a lot of African startups. But for the first initial stages of startup funding, I think there are incredible local and strong local funds that can carry you all the way to Series A, Series B, right? Andreata just raised a pretty big fund to take companies up to the Series B stage, if I'm not mistaken, right? So the capital is available. But once you reach the Jumia scale, once you reach the Take a Lot scale, once you reach the Souk scale, you do need to start to look outside, because maybe those later stages are not so available here on the continent.
What about IPOs, listed markets, stock exchanges? We have them. We have them in several markets. We've got the JSE, we've got Lagos. Is this a viable option? And particularly, I think it's even more relevant for e-commerce platforms because of the relevance and the fact that it's a market that people can understand quite easily. Is this a viable option for capital raise?
It's definitely a viable option for capital raise, but what I will say is that the number of companies that make to IPO is much less, because the requirement for IPO is much more stringent. So even when we look at our portfolio, we know that probably not more than 20% will IPO. The vast majority, you will have to look for capital in the private markets. Now, when you're thinking about IPO, you mentioned, we have stock exchanges here, in Kenya, in Nigeria, and across the continent in Egypt. What you need to also think about is one is the understanding of your business model in terms of the market. Like, would people understand the market? Are there analysts that are covering your space that are able to follow and present information about your company to potential investors? Is there depth of liquidity in the market? Because that's where sometimes some of the African exchanges fall short in terms of depth of liquidity. So that's why you find some African companies going to go and IPO outside, because there's a longer history of companies in the e-commerce space. There's a depth of liquidity, which sometimes you can lack. I mean, you can also think about cross-listing on African markets as well. So I think, over time, I think we'll see more, and hopefully we can do more on the continent in regards to IPOs.
And I think looking into the growth trajectory and the IPO path in particular is something that we definitely need to explore in a lot more depth. But that's all we have time for now. Thank you so much to the both of you for joining us today. Really a pleasure talking to you. And now that we've heard from those investing, let's hear from our hands on the ground. I have with me Alex Thompson, co-founder of Naked Insurance, and Racine Sarr, founder of Shop Me Away. Now, Racine, I want to start off with you and just get your initial perspective of how you view the market, particularly in Francophone Africa.
So here in Francophone Africa, namely Senegal and Ivory Coast, which are the two main markets where we are operating, we can see that there is a gap actually between the demand and the supply. Let's take, for example, the very simple case of a laptop, which is needed by many entrepreneurs actually. That laptop will be 50% to 100% more expensive in our region than in an industrialized region, for example. The reason, of course, is the lack of supply. So those products are manufactured outside of Africa, of course, but also a very poor system of cross-border logistics. So this is the situation here in West Africa, Francophone Africa. And what we are doing at Shop Me Away is that we are bridging this gap between that demand, which is frustrated, and the supply, which mostly lies in industrialized countries, which are bringing more manufactured products to our region.
Yeah, and I'd like to bring in Alex in this. I mean, it's quite an interesting take to have an insurtech in the consumer market segment, but there's a close tie, particularly when we look at it from a data analytics perspective and how you're with Naked using data and consumer insights to be able to produce and potentially create products that are more suited to consumers. Perhaps you can give us more insights into how exactly you're doing that.
Insurance has always been a strongly data-driven game. You know, it's whether it comes to pricing or risk management, it's been a key part of how insurance has worked. And when we bring in technology, it just unlocks a whole lot of potential. And you know, as one of the things we're trying to do is to expand access to insurance. You know, yes, it's about understanding different consumer groups. It's about understanding what's working for people, what isn't. With insurance, like with many other financial services, there's a lack of understanding, there's a lack of trust. And so really sort of looking at the data and understanding how people are responding to things like insurance is key to expanding access, to delivering value to customers.
And Racine, when it comes to data, how are you using it? I'm particularly curious to hear about some of the e-commerce strategies that you deploy to get that initial offtake in terms of users for your platform.
What you need to understand here is that we are a platform which is client-centric. So our offer comes from the customer's requests. So basically, we are using the data to analyze and know more about this consumer, more particularly what he's interested in terms of categories of products here, also in terms of opportunities in the future to develop. That is really where we are tackling the problem of knowing who is our customer and what does he want. Because at the end of the day, our platform is centered around the African client, the African customer, and we are trying to match 100% his demands in terms of products and in terms of pricing.
Still on the question of data, and it's a question that I actually have for the both of you, but I'll start with you, Alex. What are some of the trends and insights that you've seen that have surprised you and potentially led to a change in strategies or product development? I mean, we hear of these stories all the time, and I'd love to get your take on this.
One of the things that we allow customers to do is to buy insurance at any time of the day or night. And, you know, I think if you come from a traditional insurance background, you would have said, well, no one's going to buy insurance at midnight. It turns out, I mean, people are buying insurance all through the night and are doing things all through the night, you know, like pausing their car cover if they're not going to be driving it for a while, you know, making changes. I think the convenience of being able to, you know, be fully in control of your insurance is something that is massively valued. And you know, I think just, you know, more generally, the potential that data and analytics, machine learning, artificial intelligence have in the value chain of insurance and just improving the delivery of insurance, being able to meet customers' needs better, being able to cut costs out of the value chain and deliver it at a better price point. You know, that potential has been incredible. When we started, we had a sort of vague idea that we were going to do something in the space, but you know, just actually seeing how it works, how in a claim we can take, you know, cost out of a system, how we can speed up the handling of a claim, you know, has been incredible to see, and I think it's allowed us to differentiate ourselves from many of the more traditional players.
And Alex, I'm actually gonna piggyback on one of the elements that you talked about, the element of cost and bringing a product forward. I had the initial question with regards to new trends, but Racine, I want to ask you, when it comes to the pricing of your products and bringing them to the consumers, because you're dealing with manufacturers, brands, companies, products that are from outside of your target market, the market that you operate in. How do you balance and manage that cost element?
So the two main elements of the pricing here, of course, is the purchase price from the manufacturer and then the cross-border logistics costs. And what we have been able to achieve with Sharply Away is to build a software where we will be onboarding forwarders, logisticians throughout Africa, but also from the origin countries, namely Europe, France, the United States, China. And therefore, those people will be able to seamlessly coordinate the operations. And this results into a decrease of the cost, the cross-border logistics cost by 50% to even 70% in some cases. So we are operating a whole different model where the product which you need doesn't lay in a warehouse next to you, because it would have been imported first and it would have suffered some storage costs from an importer. But we are linking you as a client directly to the manufacturer and the brands, and we are streamlining the cross-border logistics to you. So if you are okay to wait for 5 to 7 days, you're good to go on shopmirai.com and have your costs be reduced by 50 to 70%.
And I guess, Alex, when it comes to challenges to growth for your business, logistics is fortunately not one of them for you. But I can imagine that regulation and operating in different markets can be when it comes to scalability. What other markets are you looking at for expansion?
Yeah, at the moment, we only operate in South Africa. And, insurance is a product that doesn't sort of cross borders all that easily. And you mentioned regulation. I mean, consumer preferences tend to vary quite significantly across countries. But of course, we are looking at this, and we're going through a process of evaluating different markets. We haven't sort of landed on any particular countries to enter at this point. On the African continent, the biggest challenge for us is finding markets that have enough scale, that have a large enough addressable market to make it, worthwhile to enter, to be able to, put down all the costs that are needed and to get a sensible return. And I think this is a challenge in many markets, because the insurance markets are quite underdeveloped in a lot of countries. And then the regulations also vary quite significantly across different countries. But it's really about, I think the more we can support the development of the insurance sectors, the more regulation can be harmonized. I think the better we're going to be able to do, and businesses like ours are going to be able to deliver value, to a much greater portion of that enormous market that you mentioned earlier.
Yeah, indeed. And Gracine, Alex just talked about consumer preferences. How does this look like for your market? Because like you said, you are customer-centric, client-centric, and we're talking about a variety of products, and you're operating in 2 different markets. How do you tailor your business model to be able to cater to the needs of consumer preferences, tastes, and desires?
We took the opportunity to partner with, let's say, giant catalog owners, giant distributors. So we're partnering right now, namely with the likes of Amazon. So our customers have direct access to millions of products, and which fulfill 95% of their needs in terms of manufactured products. Again, given that we are in that segment of those high-value manufactured products, which our customers need, either for their well-being or to operate their businesses and offer, again, incredible products to their own customers. So therefore, we are bringing the world to them. I mean, there is no product which they cannot access. It's a real gateway from Africa to the world. And again, the principle of streamlining the cross-border logistics is a key success element to that.
Yeah, and in closing, actually, I want to bring you back in, Alex. I'm thinking of insurance tech as a game of trust. I know for me, I have to put a great deal of trust that my insurance company is really going to show up if something would happen to, let's say, my car. How do you deal with trust, in sustaining and building trust as a new player on the block when you have behemoth companies that have been operating for a long time?
Well, of course, it starts with our name, right? You know, this name Naked is really trying to represent something transparent, something that is real and something that you can rely on. And then it really extends all the way through everything else that we do. We communicate really actively with our customers. The app itself actually is really a place in which you can see exactly how things work. You can make changes, change things back, make sure that everything sort of makes sense to you. Whereas I think a lot of people feel that when you're dealing with sort of an insurance company that's sort of sitting behind a call center or a broker, you're not quite sure where they come up with the things that they do. Whereas our stuff is right in front of you. And then also we have this amazing concept called the naked difference, where when claims are low, we actually don't benefit. And this allows us to be much more on the customer's side than would typically be the case with insurance, by really taking more of like a flat fee or a subscription fee from the customer. We can be much more on their side to make sure that they get value, and it doesn't feel like we are going to be fighting with you at claim stage. So it's really, I think in building trust, in trying to build confidence in the mind of the customer, there's a whole lot of things that we do to try and get that right.
Brilliant. Well, a big thank you to our founders. This is how we wrap up Startup Caps for this week, but we'll be back next week with another episode on health tech. The conversation, of course, does not end here. We'd love to engage with you on social media. You'll find us on X, LinkedIn, Instagram, Facebook, and TikTok _Startup Caps. And of course, you can find out more about this episode on startupcaps.io. That's it from me. See you again next week.